Hello, and welcome to another episode of the Product Thinking Podcast. Joining us today is Fabrice de Mazery, a distinguished product leader and entrepreneur with an impressive background in product management. Notably, he served as a chief product officer of TheFork, which is part of TripAdvisor, aka the European Open Table. There, he achieved remarkable success, including generating $1.4 billion in gross merchandise value, achieving 27% year-over-year revenue growth, and reaching profitability for the first time in the history of the company. Fabrice's career has been defined by steadfast commitment to balancing user value with business impact, a philosophy shaped through his diverse experiences as an entrepreneur, product manager, and advisor. From founding startups to leading growth initiatives at renowned companies like Deezer and IBM, Fabrice has cultivated a unique perspective on treating product management as a strategic investment rather than a cost center. Today, he'll be sharing his insights on building product strategies with an investor's mindset, fostering partnerships with stakeholders, and the key lessons learned from both successes and setbacks. But before we talk to Fabrice, it's time for Dear Melissa. So this is a segment of the show where you can ask me any of your burning product management questions. Go to dearmelissa.com and let me know what they are. This week's question is this. Dear Melissa, we are embarking on a big transformation program. However, the space I work in does not want to do discovery on changes to the current operating model, business processes, or people changes. How do I create the awareness and influence our leadership and business partners to understand the value a service design team can bring to the transformation journey? So when we're starting a transformation like this, it is important to have a team actually manage the change management, especially in a large organization. So this can definitely be thought of as a service design team. When we're looking at trying to get people into more of a product operating model or an agile operating model, whatever you're doing here, it's going to be a different end state than where we're at right now. And it's going to affect how people do their work. It's going to affect how the business actually plans the work, thinks about budgeting, and it's going to affect people's roles. So we want to make sure that we're considering all of those factors when we actually start on this transformation journey. So if you want to influence your leadership team on this, you have to make them aware of what the changes are. A lot of times people think it's just introducing a process like Scrum or something else, and the rest will take care of itself. But how do you show them that other businesses that are operating this way are also thinking about all these different factors? There's a lot of case studies out there about businesses that have gone through transformations. I've done talks with large organizations and CPOs from them who talk through how they thought about the roles, how they thought about upskilling people, how they thought about their processes and their design. All of those things are really important. So when you're in a large organization too, in order to look at that change management, usually the head of product is the person who will be working with a team. Something like a product operations team can help you with this too, to really look at that end-to-end change management piece. And then they consider working with key partners to introduce role definitions, to understand different processes that have to work across organizations. They also look at how we might have to influence the way we do things like budgeting or governance or strategy reviews to actually get there. So maybe what you can do is introduce them to the way that other organizations work and show them how this is more of an undertaking here than we actually anticipated. Now, that might not be something that you can just walk in and do. A lot of organizational transformations take a long time. And where I see they start is usually by upskilling people, teaching them the new process or the role. Then what's going to happen is we are going to hit walls. So the best thing that you could do here is start by asking, what do we think this transformation is actually going to do, right? What are the goals we're trying to hit here? And then over time, measure those. And if it's things like we believe is going to increase profitability or it's going to help the business do X, Y, and Z, track them. And then over time, if we're not meeting those things, we should start asking why or why not. So every transformation process should start off with really, really clear goals and metrics we should be tracking about what we think is going to happen. And then we go back and we revisit them. That's usually when leadership starts to realize the scope of a transformation, but it could take many years to actually start to implement that. So you'll want to start there, try to define what success looks like. And then if we can't measure success or we don't see we're successful, that starts opening up the conversation to what else is needed. We go out, we look at the landscape of things. That's where a service design team can come in and help with that change management. So I hope that helps. It usually does take organizations quite a while and a lot of trial and error to get to that point. So I think there's a lot of patience aspect on here, but it's good to just bring awareness of how other people are doing it and what scope was needed and maybe introduce it from there to start. That's it for Dear Melissa this week. If you have questions for me, remember, go to dearmelissa.com and let me know what they are. Now let's go talk to Fabrice. Welcome, Fabrice. It's great to have you here.
Well, thank you, Melissa, for having me.
So you have had a long, illustrious product career. You have worked at TripAdvisor, many of these other places. Can you tell us a little bit about what brought you into the field of product management and a little bit of history of how you've been leading teams?
Yeah, so I really started by chance. I created a company 20 years ago now, 22 actually. Let's say that I'm kind of a boomer now, and so I really started in legal tech in something that was just not in existence. I didn't know anything about products, about engineering, about design. I was a low student, right? So I just saw an opportunity. I was getting bored at what I was doing at university. So I created the first company, which I crashed. And it pushed me to wonder why I had crashed. I wanted to know exactly. So this is where I actually started to read books, Crossing the Chasm, read books from Alan Cooper, from Don Norman. And it took me more than, I think, 7 years before understanding that I had a job, which called product manager, thanks to Marty, actually, the first edition of his book. And that's how I really became a product guy.
So since you got into the product community, you also led TripAdvisor. Can you tell me a little bit about what you were doing there?
Yeah, so I was CPO of one of the three big brands of the group TripAdvisor, which is TheFork. You could consider it's kind of the European open table, if you will. And I jumped into a company which had been the leader in Europe for 15 years, but had a bit, how could I say that, in a state when everything was going okay and you're still the leader and you have competitors here and there, but you have to be ready to rethink how you do your business. And that's always hard. So I joined the company to rethink it, to go from a business that was only fee-based to a business that would be a sustainable marketplace. And that was quite exhilarating, because the people that you're helping at the end are restaurateurs. And in Europe, especially, after 1 year, you have 30 or 40% of these restaurateurs we did actually stop the business. It's a failure rate which is as high as the startups. So it's really, really great to bring more than people, but to help people build that success through technology in a field which is, by definition, building experiences which are not technological.
I am actually starting a restaurant in South Carolina. So this is really interesting to me. My sister is the restaurant person, though. She's running it. We're just doing this together. When
Nice.
you came in there and we're looking at the business model and the product, at TheFork, what were some of the problems that you noticed that you could be solving for restaurateurs and how to help them succeed better?
Well, to be honest, there are two things. The first thing is like you never know who you need to compare with when you're a restaurateur. You could think that it's their neighbor, but it might not be the place where people go when they think about an alternative to yours. The second thing is that you could think that your competitor is on your street, but maybe it's not. So the first thing is how to give you comparison to know, are you going in the right direction, and who you should actually consider as your main competitor. So it really data about this. The second part is one of the things that we bring, just like Google Reserve, OpenTable, whatever, is just people. It's just not even leads, it's real people, because it's leads that's going to be, by definition, going to pay only if people come. So it's a pure success metric, right? As direction that a lot of SaaS companies are taking today. But the thing is that that could be you or me. You just pay exactly the same price. And maybe as a restaurateur, I want people that are more open to the kind of cuisine that I'm doing or the experience that I want to deliver. So try to push a little bit at which are the people that you need to actually find this fit, people that will love your experience, talk about it, come back, instead of just having people just like I don't know, just like you have an open, I don't know, an empty chair, you want someone on your chair. It's more than this, right? So you want to push them to define what would be their own success. How do they look at their success? And try to help them with data and with the right people to actually reach that success.
This reminds me a little bit about, I feel like, helping leaders set strategy too, right? Like what
Yeah,
are we really trying to do here, right? What does
yeah.
success really mean to you? And in a lot of your talks, you have been talking about shifting product managers' mindsets from being that of just builders to that of investors. Can you tell me a little bit about What does that actually mean? And how do you shift your mindset into being an investor?
You have to start from the beginning. So you work in the US. So in the US, I'm going to draw a big caricature there. I'm sorry for that, but the business acumen is something which is inherently cultural in the US. It's not at all the fact when it comes to Europe. I'd say at least France, Italy, and Spain, for example. The product management came out of the IT department, not on the business department. So culturally, there was always been some difficulties of people considering themselves as a business function and not as an IT function. And even the rest of the company still has this biased view of what you're doing. So you've been pushed to talk about discovery, talk about what you should do when the fact that it's complicated and you're first in uncertainty. But people in front of you don't understand that. All they want is to know when this specific feature will actually get out. So we've been, I'd say, battling against the profitability call with what I call product planning. Okay, we talk about all these frameworks which people don't understand. And we need to stop doing that. That's for me the first thing. Forget discovery. Think about what it means for the people in front of you. So you talk about risk. Everybody understands the risk. When it comes to finance, of course, you consider different risk of an investment. So first thing is that which are the risks that are actually, in a way, jeopardizing my ability to build what I'm building and reach my targets. The second part for me is really beyond doing metric trees, which are great, but so many people tend to forget that you need to prove causation. It's not just drawing it because it's satisfactory, and then you're going to say 2% here, 3% here. You need to build a model, and you think about it. The third part is really thinking about whatever investment that you're doing with your team when it comes to time represents money. So if you take a typical team in Europe, there's going to be 1 million euros a year that you're going to invest, right? So it's the time plus, of course, things here and there, but profit at 1 million. When will you have a payback for that? And usually people don't understand. They say, okay, I'm building the feature. First thing is that what was the cost of it, the real cost? Second part is, okay, when will I have net margin of, 150K because I spent 6 weeks on that? No one thinks about that. That might be the most important thing to talk about with your teams and with the stakeholders. So you have different level of risk. Discovery are here to mitigate that. That's okay. You have different level of risk depending on who you are, on your teams, on the opportunities that are in front of you. And at the end of the year, as a CPO, all I'm interested in how you're gonna take that 1 million euro and invest it wisely so that at the end, I have more engagement and more money in the bank. And that's for me where we need to shift our mindset from frameworks, processes, and fancy jargon that we have and talking about money, ROI, payback, and margin.
I couldn't agree with you more on here. And I do see everybody get lost in this process trap. Where I see it the most too, and I would say this is not just a European thing. I think large corporations have exactly what you're talking about here. And a lot of the US ones I work with, the leaders understand the ROI piece and they talk about the money, but the teams are still talking about process, right? They're still deep into that. So it really, I don't think that's a hard and fast rule. And when we were in France at La Product Comp, everybody was asking me about that too. They were like, why are we so stuck in agile over here and in Europe there? And I was like, lots of companies in the US are in the same spot. It's not just Europe. But where I also hear a lot of pushback to what you're saying when I say it to people too, is from people who work on these back-end teams, right? Like you work in a bank and you are responsible for helping to do the APIs that execute trades, right? Or you're building the platform that settles them and does all that. Sure. And they ask, how am I supposed to show ROI? Like my leaders want to see the ROI. They want to see that we're doing this, but I work on the technical aspects of it, right? I'm not selling this directly to the customers. How do you help people really trace those those ROI all the way back to their product? And what do you tell people who ask you questions like that?
Usually I have a twofold answer. The first thing is, what would happen if what you actually are building crashed? What would be the cost? And I had a discussion some time ago with a big bank called the BNP, which you might know. And they were talking about SAFe, and I know that's one of your favorite topics, right? And I have an open discussion about that. And they were so frustrated about it and say, yeah, but the IT director, he wants something which is predictable. So, yeah, I can understand that. But if you crash, it's not going to be millions, going to billions that you're going to lose. That's huge. So I understand why he's so stressed of making sure that things would just go on. It's not even about performance. It's about making things work. So the first thing is, are you building something, or are you actually building something which is called an insurance, right? Just like when you're doing a factory, the idea is that if I don't do it, or if that crashes, what would be the cost? So the first thing for me, ROI, is I'm here to make sure that we're not losing money. That's kind of ROI. The second part is trying to make a link between what you do and the tasks that are doing, what is the value of the task. And as an introduction, we're talking about, you and I, about product ops. The formulas are the same thing. We know that time to task is damn important. And what is the value of earning, I don't know, 2 seconds, 10 seconds, 1 minute out of a task? And that could be the same thing for the developers. I'm building a platform that developers kind of use. If I have my answer right away, instead of having to wait for 2 minutes, if it's easy for me to understand, easy for me to build or learn, it has a value. You need to make sure that when you scale it, you can actually measure it. And for me, it gets back to the internal ROI as your multiplier of whatever the other teams are going to scale. So yes, it's 10x, 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 and at the end, you might have a million X, and that's thanks to you.
One piece of this where I think people get confused too is like, what do they own versus the teams around them, right? Like sometimes it's rare that a single Scrum team in a really large organization, let's say, can impact the overall metric thing, right? They're like, we have to. Metric thing is such a weird way of saying that, but impact, let's say, the overall cost in like a super dramatic way, right? It takes like coordination between many people to work towards these initiatives. How do you help explain that to people and show them, the leading indicators to move that up, or the parts that you're working on and how it contributes back to the whole? And then flip side of that too, right? Like, how as a product manager should I explain to executives too that what I'm doing contributes to that whole, right? Like I might not solely be responsible to it.
Yeah, it's always tricky. We all tend to use KPI trees because I say it's easy to link things, but as long as you don't really work with the finance team to have a model, it's going to be just hypothesis. And I know how hard it is to, I'd say, go beyond the frontiers of your own department and talk to people that you usually talk to when it comes to costs and not to ROI. So the first thing is forget that. Usually finance people are really, really happy to go beyond costs. They are interested deeply by helping you, and not talking only about the data, but really helping you modelize what is the real value of what you do. So that's that first thing. Don't stay alone. Don't talk only to data analysts. Go and talk to the finance part. The second part for me is if it's really hard to do, because you just one piece of it and you just have a small part, and if the others are not doing whatever, you're not going to have an impact. I tend to focus on the customer outcomes, and that could be a bit cheesy, right? But one of the things that I see in metric trees, or that I don't see, is the customer. We tend to be data driven, but the data is a compass, not the map, right? So it's just a consequence of what you do. Sorry for stating the obvious, but sometimes it's needed. So which kind of outcome was I actually contributing to? Not only the metric, but if I do that, and I allow people to do this, if they allow people to do this, advanced away or whatever, this has actually consequence on retention or brand or acquisition or conversion, whatever. And sometimes it just help you trying to say to an executive that if you don't do anything on it, what's going to be the consequences? Going back to that, right? If people have a time to task which is that long, we see the implication it has on our activation, ergo on our engagement. So without me, this is what would happen. Just going back to that, if I give another example linked to the restaurant, but everyone as a restaurant has a specific role. And you could say that, I don't know, if Melissa, which is responsible of making sure that the desserts are done correctly, you could say that's okay. I still can sell things. Yeah, but the desserts might be 30% of the notes. That would be why people are staying long, why they take coffee, etc. So if I'm not there, what's going to happen? Is really for me the first question that you think about. And sometimes the answer is, okay, it's not going to make no change. And then you might think of changing the org or going elsewhere.
Yeah, or moving to a different part of the product. And that was an issue too that I saw when a lot of companies started transforming to agile. They had everybody over every little piece of the product, but that didn't necessarily mean you should be enhancing that piece of the product. It might work fine today. And that's always a concern too. With this whole mindset that you're talking about as well, treating yourself as an investor, thinking about it that way. When you're trying to work with stakeholders, especially ones who are kind of like, just get it done, right? I just want to see products, right? They don't understand quite the whole product management landscape. How do you get them to start thinking as what you call co-investors instead of just people who demand that you build X, Y, and Z?
Usually it starts with the loss aversion, right? Everybody is loss averse. Nobody wants to be responsible of investing in something which has zero return. Anyone would be that's going to have consequences on me, my team, my position, my credibility, whatever. And I like to, I'm sorry, it's a bit cruel, but I like to play with those emotions. So I usually am in a situation, for example, with big companies or with some salespeople, not all salespeople, we're going to be just like what you depict. I want that done. And it might even be that you're internally considered as kind of a studio, right? So you cannot play as if it was your money because they will never consider you as an investor. So play with it. Play as if you were a financial advisor. So saying, okay, what I'm good at in product is building things, right? But it's assessing the risk. If you give me that level of money at that time, so 3 months, it's 300K, for example, and you want that result, okay? Considering what I know about what you're pushing as an investment, the risk of you missing the target is 90%. So are you ready to go on and being responsible of that? Because my only responsibility as a financial advisor is tell you what is the level of risk and what are the odds of missing the target. So you really make people think differently and say, I can help you because I'm good at this. That's what we're good at. De-risking situations. All the frameworks that we have and the tools are here for that. Delivery is the easy part. Even if people don't understand that, it's kind of the easy part compared to the rest. So starting to making things like this is the first thing. The second part is what they're going to invest. So I take co-investors. It's not co-investor in terms of putting really money on the table. Is, okay, you're talking about a feature, but just building a feature is not going to make it, I'd say, pop everywhere and people will, there's no build it and they will come, as we used to say. So let add 50% of my cost on the go-to-market and go-to-customer. Are you ready to invest this kind of money? Which risk do you see on the go-to-market parts? And at the end, well, how can you not give me the insurance, but at least prove or help me prove that I'm going to have a payback on my investments, and you will too. And when exactly? Because I have plenty of other investments, right? I have 1 million euros a year to invest. So if I invest there, it's money that I don't invest elsewhere. Everybody understands that. But which are the figures that gonna help me and help you prove to one of the management that we should have our payback in 6 months, 9 months, 1 year, and what you're gonna do to make sure that it happens. And if you don't do it, well, I'm not gonna be the one responsible. So that's why I said having skin in the game. It's not only about asking for things, is that you know that I'm not going to do the go-to-market instead of you. I'm not the one who's going to push the sales to pitch that. I'm not the one that's going to call leads. It's going to be you. It's going to be your teams. If you don't put the money, the right resources on the table, we're going to fail. So that helps you to bring whatever you can bring on the table to make sure it's a success. Usually people start thinking differently when you answer in that way. And I'm not even talking about saying no here. I'm talking about, are you okay with this level of risk? And usually people are not.
I worked with a VP of product once who printed out a bunch of money on a piece of the paper and labeled them all and gave the stack of investment to the leaders that he was trying to get the prioritization requirements from. And he outlined everything that you were just kind of talking about. Like, here's our trade-off decisions. Here's where we are. Here's where we can de-risk things. Where would you put your money? And they talked through it all. And he said, like, just handing them something that seemed like cash made them realize, oh, all of this actually does cost money. And we need to be thinking about our different risk profiles and how we're investing in here. And it kind of changed the entire perspective of what they were working towards. So I thought that was a really cool exercise with it. What are the types of like prioritization activities or things that you would do with stakeholders to get alignment around those things? Like, would you run a meeting? What kind of frameworks would you use to help build your case here?
Actually, I have two logics here. The first logic would be, if I have, I would say, modern product organization, when I have teams responsible of whatever area, impact teams, P3 teams, I don't really care, as long as I have a clear ROI link to the strategy, right? And usually I'm trying to build not really cases, but I want what I call pitches. I want them to bring things which is, we think there might be something interesting here. I don't want you to over-engineer a business case, because I've never seen a honest business case in my life, ever. Right? And if you build it, you still have this optimism bias. So just bring a pitches and can build things together, which is one way. It's saying, if it enters my prioritization principles, we can do it. Now, if you have a more, I'd say, less modern organization, what I built in the past was what I call investment forums. So the idea was really to take the discussions and the decisions together. So not here as, for example, defending your country if you're a country manager, but making sure that whatever investment that we are doing is what's going to help the company. I'll give you an example. When I was working at TheFork, we had 4 country managers. And in the past, if someone from Spain was interested by something, they will do this. We all know that this list of whatever they want, which is, let's say, refined enough for them to make sure that you cannot say it's not interesting, because they can say, I know on my market that blah, blah, blah. And that was always a pain. Now what we built was a way for all the countries to take a look of whatever proposal were made by the others, and they're going to judge if that's interesting for their own markets. So is there something in Spain that pushed by Spain could be interesting in Germany? If it's not, well, we might have a problem there, because Germany would say, I like something which is good for me too. So you start changing the relationship between, okay, we are responsible of selecting the things that should have the best impact for all of us. And so you're really here to make the decision. We build a process so that we have, I'd say, pitches that are interesting, pitches that have been challenged before. But at the end, we are responsible of the investment decisions. One of the things which is great is that if it fails, they are on stage with me, right? So I'm not the only one responsible. And of course, if that succeeds, we are all together there. But I know that we started to see a kind of behavior of people doing roadmaps without even talking about roadmaps. I vividly remember one example of someone from Spain who had pushed an opportunity, and we all agreed that it was interesting, but not right now. Um, and the answer that she gave was, I understand, I hope that maybe in the future we might be able to invest in that, which would not, was kind of saying, let's see what happens and we'll see all together if that's going in the right direction, right? It's not trying to plan some things 8 months ahead. 1 year before, it might have been, that's unfair, we're going to call the CEO, we're going to do whatever first so that you put it in the roadmap. So they felt responsible of the success and responsible of the failure and responsible of the right usage of our resources. So we changed drastically the relationship that we had all together. And that became to be a good relationship and start to make friends with them. Before, that would be completely impossible, to be honest.
When you look at building those relationships too, what do you think is important for product managers to keep in mind?
But I think the first thing is trying to understand that everybody has a target in the company. And we should usually, because we're facing uncertainty and we integrated that in the way that we think about things, we think in bets. It's more poker than chess, right? And we accepted that. A lot of people hate uncertainty. They absolutely hate it. So they have targets which are at the end of the month, and we tend to say, yeah, but we cannot really anticipate whatever. And that's unbearable for them because they think we are being irresponsible. And I heard that a lot of times. Yeah, the product, they cannot commit to anything, even to when you're going to launch a feature. For them, it should be easy. They understand, maybe they misunderstand. They imagine engineers as people that are able to transfer specs into whatever feature. So you should be able to tell me that at the end of June, that should be out, right? That's the only thing that I can answer. I don't understand whatever gibberish you're talking about for the rest, but at this, that could be solid, right? And no, we cannot do that. We always say, it's complicated. So the first thing is, yeah, they have targets. And if you need to talk with them, you need to talk with their own language. You need to ask questions about business. How many leads you could get in 3 months after the feature is out? And what is your percentage that you have today between the number of calls and the number of closed deals? Right? Ask them the kind of questions. Use their own language. Don't use yours. That's really the best thing that you could do to make people understand that you understand them. It's going back to empathy, right? But internal empathy and using people's language and not yours.
I think that's an important thing for product managers to remember. I feel like we empathize a lot with our customers, but sometimes people are not thinking about internally with the stakeholders or the leaders in their organization. And instead, we think these people who just scream at us to get things done, and we forget they're humans too.
I love that.
So one of the things I wanted to talk about too was kind of, you talk about this talk, act like an owner, challenge like a VC, and you discuss the importance of evaluating product decisions with a VC mindset too. Does that change the way that you think about product investments like we're talking about, or is it a similar type of framework here?
Well, for me, there's a way of looking at the different opportunities that you have and looking at the team part. So usually VCs going to say that, yeah, I'd like to make only deals that transform into unicorns, but it's never going to happen. So you're conscious that you need to diversify your portfolio. That's the first thing. And second thing is that you invest in teams and not really in products. And you can reproduce that way of thinking when it comes to your product investments. So usually I say that 3 types of investments. And that's the same thing if you're a product manager or different granularity head or VP, whatever. The first thing is what I call strategic investments, which are directly correlated with the OKRs, if you have OKRs, the strategy that you have, which are things that's going to push the product into the right direction. And that should represent 60-70% of what you do. It really depends on it. That's kind of I'd say, rule of thumb, right? Let's say 60%. And then you have low-hanging fruits. And from all the hanging fruits are a mix of sometimes enablers that you do for the other teams that they need to be able to operate. So if salespeople or ops or marketing wants to migrate to Braze, and they say that's important for them, of course you need a way to assess it compared to the other enablers, but it's not because it's not directly linked to a feature that is not important for the business of the company. So you need to accept to spend a little bit of time there. Refactoring is a bit like the tech enabler, right? And you have micro optimizations, which are things that not a lot of ROI, but not a lot of risk too. So sometimes you need those small improvements, small things, because I don't know, you're spending more time in discovery and you have your team that is a bit in an idle state. So it's low ROI, but low risk. The product is kind of the mid-high or medium-high risk, same thing for ROI. And then you have bets. I like to talk about bets when it comes to things that are really, really agile. And this kind of projects that you're okay to, I don't know, spend 3 weeks every year on things that could build the future of the company. Things that you could lose the 3 weeks altogether, and that's okay. But if you don't do it, well, you might just be replaced by others. You might miss the next wave of technology, etc. So you just could get killed by the market. And the way that you consider your investments should be just like this in saying, I might have one bet. It might be unicorn. It might disappear. Then I have strategic ones, and I know that bit by bit, I should have money. And if it costs low hanging, that's low risk, but at least I have a return. For one thing, well, say that because some investments can be better than the others, you never know before. You should have a kind of a balance. And any investor knows that you need a balance to make sure that at the end of the year that you're going to reach your target. Now, going to the teams part, the risk aversion of people is different, right? Usually people that work in platforms, for example, they're more risk averse. And as an investor, you should consider that you cannot ask any teams or any team members to face the same level of risk. So if you're working in the startup, everything is a bet, right? You pre-PMF, everything is a bet. If you try to push people from big companies that are attached to their level of security, asking them to act like a pre-PMF startup, it's never going to work. Okay, it's a fantasy, never going to work. The same thing for platforms. You can make them think a little bit like investors, but maybe they are more, I'd say, bankers. That's Wall Street investors. So you need to accept that. The last part is if you push people into a direction when you're going to create anxiety because they're not okay with that, is how you actually push people to burn out. So that's not just a detail. That's really, really important. And that's really important for you as a product manager and especially for you as a leader.
When you're trying to evaluate if you can push somebody into a more, taking a more risky bet or trying to cultivate, like, this is a safe space, right? We talk about that a lot. How do we build safety so people don't be so risk adverse? What would you do as a leader to kind of assess if you're going to push your teams too hard and burn them out and try to make sure that they understand they're not getting fired for trying something?
So I would link two things. The first thing is really experience. I've been the founder 3 times. So as a CPO, I'm perfectly okay with failure because I know that if you fail on one investment, you have all investment to get it back. And that's, well, in a way, at the end, you have some kind of a acceptable average performance. I see for me, the problem is not really the safe place itself, it's how people feel internally that matters to me. I know you are, but I know if everyone knows about the flow state in psychology, but we try to push ourselves beyond our level of comfort to push performance. And if you want to go higher, you need to be in excited state, but not in an anxiety state. And I see naturally some teams that are more eager to take risks. They are more eager to invest time at improving their learning velocity, taking some shortcuts if they need to. And that's absolutely okay to push something in production. That's the easiest way to actually learn something. And I see other teams that are really, really scholar in a way that they consider the process. It's just like what you were talking about before. And for me, it's a symptom of someone which is scared of getting out of the box in a way, right? So I'm more attentive to, okay, do I have someone she's more of a product manager than really a product manager? Do I feel like the team wants to go beyond their natural comfort zone naturally? Do they ask for challenge? Are they okay with being challenged? These are all the symptoms that show me that I can push them to take those risks, assume the consequences, and not get burned out through the process. Then it's my responsibility to, as a leader, when I talk to other leaders and talk about the investment that we're making, make sure that the ambition is clearly stated right from the beginning, even if it's just 2 to 4% improvement and no 3.21, which I sometimes see right at the beginning of a product investment, which is completely crazy. It's too precise. If for me to make people understand that what we're looking for is a kind of a yearly performance and not the performance of every investment compared to the others. So that really on my shoulders to present that way, to be honest.
So looking back on your career, if there's a product manager who's listening to this and says, I want to be a more profitability focused product manager, what types of skills would you recommend that they cultivate?
Well, the first thing is going to be back to that, but beyond data is trying to understand how the business works. It's more curiosity of spending time with salespeople, spending time with lead generation people, really getting connected with how hard it is to sell, not because the product is bad, but because, well, having the ICP in front of you and making sure the right moment, etc., it's hard, right? And a lot of the people that I know are scared at selling things. It's not even that they're not interested. They're scared. They might say that, okay, it's not noble enough, but that's not really an excuse. They just don't know about it. So for me, that's really the first thing. The second thing is, it's going to be a bit weird to say that, but the second skill that I consider is your ability to kill your own optimism bias. Right. So we are optimists in product people. We all think that whatever new feature that we're building is going to be better than what was before, right? If you're not an optimist, you're not a product people. It's absolutely impossible. But trying to consider scenarios, not just black and white, not it's working and it's not working. Different scenarios, what could happen? What is the worst case scenario? What's the best case scenarios? How people could react, what could happen, not only for mitigating risk, but only to consider that whenever you're doing some discovery, you're not discovering only about are people able to use it, or people are saying that they want to build it, but what if I'm unable to have great go-to customer, no discoverability of the feature, etc., etc. So considering all the process of people buying something instead of only think about people using something. And for me, it's a big help. And maybe because I used to be a founder, so I had to sell things, okay? And with my own money, so it changes things a little bit. The last part for me is, if you want to be more profitable state, you need to think of your process as a multiplier. So when it comes to taking decisions, you need to be okay with taking bad decisions. And that's okay, as long as you never know what's going to be the results. The perfect process is not at all a guarantee of a good outcome. That's how life is based. And that's because we face uncertainty when it comes to human nature, right? So I tend to push people to say, well, don't wait if you're doing an A/B test for the perfect status. Look for a way to cap the investment that you're making. If it's 5 days, that's 5 days. You have a trend, that's okay. If you just multiply the tests, at the end, maybe, I don't know, 20% of the tests will give you something wrong, but 80% is going to give you something right. So it's not the quality of the decision that really matters. It's the velocity of the decision that really matters. And that way of looking at things on the process or parallelizing things or being okay with imperfect information and saying, I'm not going to spend more than 1 week doing that discovery. And that's, if it's more than 1 week, I'm not going to do that test and be okay with that. It's a special, I'd say, superpower that I've seen usually in people that are very senior ICs in products. Rarely seen that in engineers, rarely seen that in leaders. It's a special species are people that you definitely can give them whatever critical strategic problem. And they're going to be that 10x for real and not just for the image, because they are able to be so quick at making decisions and at failing that in a way, they're going to find the value where it is.
I think that's really great advice for all of our product people out there listening. Fabrice, thank you so much for being on the podcast. If people want to learn more about you, where can they go?
Well, LinkedIn, that's the easiest way. And well, if they're really interested, I have plenty of videos of talks here and there. I'm doing that for the passion, not really for the business. So if you have any questions about it, feel free to ping me, and I'm going to send you a bill because you sent me a question on LinkedIn.
Well, thank you very much for that. Hopefully everybody sends you a lot of questions. We will put all of your links too at our show notes at productthinkingpodcast.com. Thank you all for listening to the Product Thinking Podcast. We'll be back next week with another amazing guest. And if you have any questions for me in the meantime, go to dearmelissa.com and let me know what they are.